Morning, Steve Reed in Chicago with the morning grain comments. Grain prices are higher overnight. We got the stocks higher and probably looking at crude higher also. Some of these markets are all kind of connected with the hopes that U.S. and China eventually will have a deal and drop the tariffs. That'll open up markets again. There is talk that China may be thinking about buying additional U.S. products, including like pork and corn. The trade talks in China concluded after 3 days. That's one more day than people had anticipated. And now we're awaiting some kind of joint announcement as to what the next step is. Some people think that it may come to the United States late in January, early in February to hammer out a deal. As far as the other news, again, we're still in the partial government shutdown. We don't have any USDA data. The one thing I think the market likes the most is any daily export sales. We also had some trade guesstimates out yesterday on if we had a report on January 11th, and I think the grain market is kind of starving for some of the information. Down in Brazil, it's still dry in north central, northeast Brazil, still wet in northern Argentina. Looks like that pattern is going to continue for the next couple of weeks. We did see another group come out with Brazil crop at 116 million metric tons. USDA is at 122. And they said that if this dryness in Brazil continues through February, they could drop the crop to 111 million tons. So, I mean, that would bring the numbers down from the USDA's increase in global stocks from a year ago. Soybeans tend to trade in 25-cent increments, so we first have to get through this 930 area, which is the 200-day moving average, but we could test 950 and then see how we go up from there. So the momentum of the soybean market is up, despite the fact that open interest yesterday was down. Open interest was up yesterday in a down market, which suggests we might have had some new shorts yesterday. So we'll just kind of see how the market wants to react if there's some kind of announcement, and if we have the South American weather situation. Corn market's still pretty much in a trading range. The key resistance is probably the 390 area on the March. Again, open interest yesterday went up, suggesting some selling in the corn market. Farmers is a pretty good steady seller on up markets, which keeps a lid on prices. Again, the USDA numbers probably would have suggested a lower D1 stocks than a year ago. There's some talk that farmers may not plant as many corn acres, especially in the eastern Midwest, as they thought earlier with this rally in the soybean market. And so there is some things out there that might help push corn through this 200-day moving average we haven't traded over since last June. Wheat market's got some business around. Yesterday we closed higher with open interest going down. Might have been some short covering. Algeria came in and bought 550,000 tons in their tender. It looks like U.S. hard red winter wheat was 120,000 tons. The CIF price was the highest price in 3.5 years. Tunisia's tendering, and also Egypt announced a tender. So that little bit of business could offer some support underneath the market, especially if U.S. farmers plant a record low amount of wheat in 2019. So wheat's got a lot to work up to. The 200-day moving average is around 543 in the March wheat, so it'll be a struggle to try to get through that price level. But for the crude market, for the stock market, even the copper market, for corn, for beans and wheat, momentum is pushing up a little bit, which is supportive to price. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.